Does President Trump have Jay Powell to thank for that?
Look, it's good to see you. Thanks for having me back. Look, I think that the president has delivered below expectation inflation for 4 months in a row, and every month he's in office. And I think that says something about about our policies. Our policies push the supply side of the economy out, and in doing so, help firms produce more with less. So, I think inflation has been very successfully coming down, and all the Chicken Littles and doomsayers still have very little to show for themselves.
Well, when we consider what Kate was just telling us about, Mr. Chairman, this idea that companies and firms may be reluctant to pass on any higher costs that they're facing due to tariffs for concern that the consumer demand won't be there to tolerate those price hikes, when could that actually start being a problem for the economy? If you're not getting the inflationary pressure, but that has implications for growth and bottom lines.
So what you just said, that firms don't think that they'll be able to pass through prices to consumers, is exactly why Americans won't end up bearing the burden of these tariffs. What you've said is that firms don't have the pricing power to do so, which means that ultimately sellers of the goods, the countries that we're tariffing, will have to lower their prices to absorb the tariffs. And that doesn't happen immediately. It doesn't happen overnight, but it happens in the fullness of time. And it comes from what economists call the theory of tax incidence, which basically states that the more inflexible party ends up bearing the burden of the tariff. And just as American consumers are showing that they're not willing to absorb those price hikes, that they're flexible, they can change their patterns of consumption. At the end of the day, other countries will end up eating those tariffs.
But just quickly, Mr. Chairman, how does that incentivize these firms if they have to eat a lot of that cost to invest in things like hiring more workers in the U.S.? How do you expand if you're getting crimped in other areas because you can't pass on higher input costs?
Well, so first of all, firms can alter their supply chains. They can choose where they import from other countries that do cut deals with us, as opposed to countries that don't. They can produce stuff here. That flexibility gives them the ability to go to suppliers and say, if you don't change your behavior, if you don't absorb these tariffs, I'm going to change who I'm buying from. And that leverage, that bargaining power, means they can force others to absorb the tariffs. Now, in terms of investing in America, there are so many incentives we're creating to get firms to invest in America. So if you look at the One Big Beautiful Bill, there's full expensing of equipment, full expensing of R&D, full expensing of new factories, right? These are extremely powerful incentives to invest in America. If you look at the academic literature, the paper from a couple of years ago by Gutterer-Zwick et al., they found that full expensing was the best bang for the buck in terms of investment incentives. And so what those do is they get firms to build more in America, expand the capital stock in America, and that increases the productive capacity of the economy, which helps keep inflation low.
I want to ask you, as part of your equation here to keep inflation low and continue growing, is this reconciliation bill that's moving its way through the Capitol right now. We heard today from Jeffrey Gundlach from Double Line Capital, who's at the Bloomberg Global Credit Forum, and warned of a reckoning coming for U.S. Treasuries, Mr. Chairman, because of our massive and growing debt. Listen to how he put it.
The reckoning is coming is that we have to somehow figure out how we're going to deal with $37 trillion. I mean, we're actually going to hit the 37 trillion number for real. It's still 36.95 trillion, but it's going up quickly. So yeah, there's going to have to be some pretty creative thinking.
Stephen, he says there's an awareness now that the long-term Treasury bond is not a legitimate flight to quality asset. Is he correct?
Look, this administration, the president take the deficit very seriously, and we have a plan to reduce it. And I think that people are overly paying attention to the CBO score of the One Big Beautiful Bill, which exists within the confines of the very particular process for passing things through reconciliation, but doesn't give you the big picture. The big picture is that through tax relief, deregulation, energy abundance, and trade renegotiation, we're going to get GDP growth up to 3%. That's going to create about 1.33 points worth of GDP of deficit reduction. Tariff revenues, tons of money that help bring down the deficit. That will also create about 1 point worth of GDP of deficit reduction. By pushing out the supply side of the economy, by cutting red tape, making an easier environment for businesses to produce, invest, hire, build, tax incentives for investment, expanding the capital stock, incentives to increase labor supply, no taxes on overtime, no taxes on tips. All these push out the productive capacity of the economy, expanding the supply side, and when you increase supply, price pressures come down. By durably bringing inflation down through supply-side expansion, interest expenses will ultimately follow. If we return to pre-COVID levels, that will bring the deficit down by over another point of GDP. I just gave you 3 to 4 points of GDP worth of deficit reduction, none of which is really included in the CBO score of the bill, and that's before we even get into waste, fraud, and abuse.
Well, the Treasury Secretary Scott Bessent, in testimony before the House Ways and Means Committee today, was asked directly if this bill would add to the national debt, and he said it remains to be seen. How long will we have to wait to see?
Look, I mean, I just said that I think that we have numerous channels of deficit reduction that are coming through better economic growth, through tariff revenue, through reductions in interest expenses, and through cuts to waste, fraud, and abuse. So I think that it will take some time for those to start manifesting, right? You know, tariff revenue is coming in, but the tax bill isn't law yet. Hopefully within a month it'll be law. Deregulation is proceeding as fast as we can do it. There's a rulemaking process. We are a nation of laws. We are following the rulemaking process. But these things are all moving ahead, you know, pretty decently. And over time, over the next year, over the next couple of years, we will see the deficit start to come down because these factors will bring the deficit down.
We've got the framework in place for a U.S.-China trade deal, Mr. Chairman. I know that you're not in the midst of those talks yourself, but you're, of course, modeling around them. The fact is we've still got tariffs, reciprocal tariffs, that are set to take effect against China next month. And you've told us before that we can work around this, that China is not the only market to supply the demand of U.S. consumers. Now that we're in the throes of this, have you identified those markets?
So there are many markets that we can substitute production from, and it depends on a good-by-good basis, right? But I think that what you'll see is that the purpose of tariffs is to induce countries to lower their barriers to U.S. products, so to create trade deals that result in more balanced trade, but that can also be more trade, and that process will give us the option of additional markets to trade with, relative to countries that don't make deals with us. So I'm optimistic, and I hope that China will make a good deal with us. But you know, things are moving along, and we'll make sure that they live up to their end of the bargain.
Did I frame that question fairly, though, Mr. Chairman? Is that loaded gun of reciprocal tariffs still on the table for August?
You mean, well, look, if we're not making progress in trade negotiations, I think that it very much is on the table. But, you know, the president understands that in negotiations, you know, you want to get to an outcome. And so if changes to tariff rates are conducive to getting to a positive outcome, I would expect them to happen. If they're not conducive to getting to a positive outcome, you know, we'll see. The president is one of the world's best negotiators in history, and he has succeeded in creating hundreds of deals over his many decades of a career. So what we will see is that he will use these tariffs to incentivize countries to move negotiations forward, to make concessions to the United States, and that will result in a fairer trade environment for American workers and firms.